up, folks? Welcome to a trade breakdown. We took a loss. And we made two mistakes here. Our drawn liquidity was meant to be bullish, as well as we traded outside the Pacific time window, which was supposed to be for between 6 a.m. and 11 a.m. We traded beyond the 11 a.m. time because I just backtested it and I saw, okay, when I have a setup that's beyond that happens right when it hits 11 a.m. is less likely to work out in our favor because that's way too overextended on the kill zone. So if you get a setup right around there, market will highly likely reverse against you right when the kill zone ends, which is at 12 p.m. And that's what literally happened. When the time window comes to an end, price has no other option but to reverse. And today, that's what happened. We had a setup after 11 a.m. and we get stopped out. And what else thing we had, our botch was wrong. Our drone look is supposed to be bullish. And there's a big lesson from this today. I just literally right now checked it out. I was like, okay, fucking this daily range is supposed to be pissing me off, right? They're not pissing me off, but it's making me confused, as I could say. Now, if you go to the higher time frame, we have this daily range, right? As you guys know, in premium, want to sell, discount, want to buy. But as you guys know, when the discount gets tapped, you can start buying in premium because the drawn liquidity is daily range high and the range low, right? So what we did was we had the same principle here, trying to do the daily, premium discount IR, which they fucking make sense. Although my higher time frame bias was stacked to the downside, although the higher time frame drawn liquidity was overall saying bearish, but guess what? Short term is much more important than long term because we're day traders. A short term will always lead to the long term. The long term could be over here or down here, but the short term going anywhere you want it to go, we're gonna go to short term because short term will always lead to the long term. And today, guess what happened? We tried to stack up the long term bias with the short term bias, and we got fucked up. We got wrecked, and which is I'm happy about that, and appreciate it. The market doing that. Now, we had two mistakes. Mistake number one, it's that we traded outside the kill zone. It's between 6 a.m. to 11 a.m. It cannot be beyond 11 a.m. because I see my setups. Let's just back to say I see my setups when it happens beyond 11 a.m. It usually has a less chance of working out in my favor, and I get more stop losses. But when my setup does happen around 6 a.m. to 11 a.m. and not beyond 11 a.m., my setup has a higher chance of working in our favor because that's when the most volatile price movement happened, and as well as that. Yeah, that's all it is. Because when the times will come to an end, price has no option but to reverse. No other option but to reverse, right? That's what happened. And we had our bias wrong overall. To go to the higher time frame. I'm not even gonna go talk because overall in a higher time frame, the mistake I made is I matched up the short-term drawn liquidity to the long-term drawn liquidity, and I made a stronger bias to the downside using the longer-term drawn liquidity, which I already had a fucking lesson about this to not do that shit, and we made it again. Made a mistake twice now. If you have it the third time, it's some retard shit, right? But we fucking matched up the monthly with the fucking weekly and with the daily. I don't know. That's how life is, right? I'm not even fucking pissed off about this, but it should never happen again. Now, if you go to the lower time frame, what happened on Monday? We were correct. Yes, Monday we were correct, but Tuesday, as you keep up and on, the short-term liquidity changes quick. Short-term drawn liquidity changes left and right. It doesn't stay the same. We can't have the same bias on the downside just because of the daily CRT, because the daily IR already got met, and there was a much stronger bias to the upside or to the downside. And I had a setup to the upside today, which happened right on 7 a.m. and it was an SMT long. Now going to the weekly time frame. Fuck the weekly time frame. Weekly time was bearish, but guess what? It doesn't matter because short-term look is way more important than the long-term liquidity. What I made over here to my short bias was a daily premium ERL to IRL, but that does not fucking work like that because Once a discount of the daily gets tapped or the premium daily gets tapped, the market go from euro to IRO without worrying about the premium and discount. And as well as we had a daily steer to the downside, which cool, but the bull side was way more important, right? As well, we had classic expression profile 2 to the downside Tuesday half of the week, which is probably going to be false tomorrow, but we should have been bullish. Why? We had a daily IRO to ERO, daily steer to the upside, a classic expression profile 1 to the upside, Monday low of the week. Much more makes sense more, right? Because the weekly time frame could be way more bearish, but guess what? We're day traders. We are 15. I execute my setups in a 15-minute time frame. Why the fuck do I care about the weekly? Right? It doesn't make sense. I give a fuck about the 15-minute. I give a fuck about the next couple hours. I don't give a fuck about the next day. Because my trade takes at least a couple hours to take profit or a couple hours to stop loss. That's what happens. And I found out that, my boss was wrong, and we traded extended. We traded from the extended time window because price has no other option when the time will come to the end but to reverse. So overall, higher time frame we were fucking bullish. Lower time frame, we were we had a narrative. We don't give a fuck about the narrative. Because the narrative without the right drawn liquidity could be patternized. If you guys know this, like there was an OT to the downside, there's an OT to the upside, right? So there was an OT to the downside right over here, and there's a false market shift to the downside. OT, false market shift to the upside. You can see market doing a false to the upside. Everything can be patternized. What matters the most is the draw on liquidity, which without that, everything else is patternized, right? Right? Because see right over here, lower time frame, we didn't have a legit high, so looking for a time to get purged. I'm looking for a legit high to get formed. Legit high got formed. But we tapped the 4-hour key level, which is the 4-hour fair value gap. We had a amount of 1 inch here, entered there, and put a stop loss right above it because market today posted to the downside, so it didn't make sense to go back up the other direction, but to go lower. I was like, okay, putting a stop loss right up there is a very nice stop loss to put, and eventually put a stop loss there, entry here, stop loss here, take profit for a 3RR, and eventually market stop loss out at a negative 1RR. And we took a loss. The lesson of this trade is very simple. The lesson is we have to prioritize the short-term volatility of the long-term volatility always. If the weekly is telling us whatever the fuck, but daily time is telling us whatever the fuck, we're gonna go with the daily whatever the fuck. We can't go with the weekly, and we cannot fucking match it up. So every time from now on forward, I don't give a fuck about the weekly. I give a fuck about the daily. Way more than daily, because weekly I will draw the lines on weekly where I think markets would go on a long-term basis. But my main focus is on the daily. I don't give a fuck with the weekly. Daily is what I give a fuck about, because the short-term liquidity will always get the long-term liquidity. If the long-term liquidity is bearish, let's say I'm wrong with long-term liquidity. But short-term liquidity can always tell me where the market wants to go. If I'm wrong with the long-term liquidity to the downside, the short-term liquidity could fluctuate, go up, right? It can tell me the actual story where the market wants to go. So eventually, once it goes up, and retraces or goes wherever the fuck it wants to go, it will tell us the higher time story even better, and it'll help us avoid losses, which that's the key, right? We want to minimize losses so we can preserve capital for the times where market will give us very good movement, right? Like today, beautiful long, and we had a shorting entry. So the lesson of this trade is two things. We can only trade between 6 a.m. and 11 a.m. Nothing beyond 11 a.m. Why am I not doing that? Because I'm already trading for fucking 5 hours. That's way too long, right? And the next thing is, I must always prioritize the daily time frame over the long-term liquidity. I always prioritize the daily over the longer-term drawn liquidity, because this is literally what happens, right? If you don't fuck up, if you fuck around, this is what's gonna happen. And I made this mistake once again last week, and I made it again this week, but this is my second chance. I cannot make it again. If I make it again, it's unforgivable. I will never make the same mistake again, which, now I definitely fucking know to not fuck around with this shit, right? But overall, our drawn liquidity is supposed to be bullish. Like, let me give you guys the bullish drawn liquidity, because the daily time frame was overall bullish, right here with a daily steer to the upside. And you can see we had a daily series upside, daily IRL to ERL. This could be fucking anything here. Daily IRL to ERL. We had a daily CRT to the upside, a classic mission profile to the upside. So we are overall bullish. Lower time frame, we're looking to look for a. We don't want to buy in a dealing. We don't want to buy in a premium. We can only buy in the premium after the discount range gets tapped. And our daily range is not this daily range because sweep to the low, sweep to the high, stable low, stable high. But guess what? Market sweep to another low, sweep to another high, stable high, stable low. So overall, our overall daily range is this right over here. Market tab discount daily range high. We had a New York continuation with a SMT with the 6 a.m. with the 7 a.m. and eventually market moved from here. Market is in this case, this was a double purge. Sweep to the low, sweep to the high. The sweep to the low had an SMT, so we are looking for a double purge long. And eventually lower time frame, looking for a number one, which we had right over here. And eventually, with the number one, we're looking for the right number one. In this case, we had the right number one to this consecutive candles. This is overall number one right over here. But this candle is so big, so we want to either take the wick or the threshold. In this case, we're taking a threshold simply because the wick is overweighing the. The body is overweighing the wick. The body is kind of thick and it's a consecutive candle, as well as you can see right over here. The rejection block, the wick was not overweighing the body, so we're taking the rejection block entry, not rejection block entry, the threshold entry itself, entry there, and we long it up for a 1 to 4 RR, which right around here. Why 1 to 4 RR? Because usually, as you guys know, for a threshold, we take 1 to 4 RR, fixed RR, and that would have been our trade right over here, which would have been tapped pretty quick. And you can see this one went to win and this one went to a loss simply because we pattern traded this one while this was the actual trade. As you guys know, this is what I'm talking about. This is why this is so important right over here. I don't give a fuck about the course, but the topic is very important, right? It's a skill that separates real traders from the pattern chasers, right? Pattern happen every single fucking moment. This is why I prioritize. This is why I tell you guys, bias is much more important than execution. Like we had a bearish pattern, another bearish pattern, another bearish. We had bearish post pattern everywhere, right? They happen every single fucking minute. So you want to prioritize the fucking. You want to prioritize what? You want to prioritize the bias more than execution. Execution is very easy, bro. It's very easy. But the pattern, the bias isn't, because bias requires more depth, more awareness. And what happened was, automatically yesterday, I thought the next is gonna be a bearish day automatically, which that fucked me up because short-term drawn liquidity changes left and right. It could change the next day, it could change the next day, it could change the next day. So we want to be very careful. And the lesson is we only trade between 6 a.m. and 6 a.m. and 11 a.m. max. No beyond, nowhere beyond the 11 a.m. time. And as well as we always practice the short-term liquidity over long-term liquidity, because short-term drawn liquidity will always lead to the long-term liquidity. We always practice the daily time frame over the weekly, over the monthly, because the daily time frame is the most important time frame. We're literally executing a 5-minute time frame. So the fucking daily is much more important than the weekly, the monthly, whatever the fuck monthly candle it is. We care about the 5-minute more than any other time frame. And thanks for watching. Make sure you guys like, comment, subscribe, share. That's the lesson. Lesson is to only execute trade between 6 a.m. and 11 a.m. Only to prioritize the daily time frame over any other time frame, because daily time frame we're short-term traders. Our trades last less than a day. So if our trades less than a day, we prioritize the daily time frame more than anything else. And we did not mismatch the daily with the fucking weekly, because weekly has its own fucking agenda. Weekly could be wrong. The daily cannot be wrong. Daily will overall lead to the monthly, to the 12-month time frame, because this daily, the short-term liquidity, which will always lead to the longer-term drawn liquidity, and that's the overall the lesson. Painful lesson. I'm not gonna lie to you guys, but you know, beautiful. We only lost one negative 1 RR. We didn't take more than one trade. We this whole week we only took one trade, which is literally that trade, which is the pattern fucking trade we took, which is fixed now here. And yeah, thanks for watching. Make sure you guys like, comment, share, and join the description down below. And I'll see you guys later. Peace out.